Cryptoverse, a mixer with your crypto cocktail? The DeFi dream is shaken and stirred. The grand crypto venture has declined in 2022. General person funds deposited in decentralized finance has contracted to about $61 billion from over $170 billion on the start of the year, in line with figures from statistics aggregator DeFi Llama. In a fresh jolt, the U.S. Treasury has sanctioned one of the industry's largest mixers, equipment that pool and scramble crypto from hundreds of addresses to reinforce anonymity, pronouncing it become used by hackers to launder their gains. The U.S. intervention this month has forced many DeFi initiatives to dam cash from wallets linked to the Ethereum-based mixer, Tornado Cash, representing a blow to those devotees who dream of a brave new global free of relevant authority. The motion has set lower-back DeFi in its capability to be decentralized and perform in a censorship-resistant way, said Katie Talati, Director of Studies at Virtual Asset Supervisor ACA. Indeed, the market effect could be huge, given the developing role of mixers, whose proponents argue they serve a legitimate use in creating privacy and say unique users must be focused through government rather than an entire code. The average utilization of such offerings over a 30-day period hit an all-time high of $51.8 million in late April, kind of double the level a year before, according to a Chainalysis observe in July, before declining with the wider crypto marketplace. This makes sense given that the timing coincides with DeFi's growing prominence inside the basic cryptocurrency environment, Chainalysis researchers wrote. Tornado Cash failed to reply to a request for comment on the sanctions. Locked and coded Aave and Uniswap, two of the most famous DeFi structures that blocked wallets related to Tornado, have visible user price range, or overall value locked TVL, drop since the sanctions have been imposed $6.4 billion from over $6.9 billion for Aave, and $5.7 billion from $6.5 billion for Uniswap, according to DeFi Llama. This won't be all because of Tornado, as maximum cryptocurrencies have suffered heavy losses within the Beyond Week and the DeFi sector has visible little change in activity. For instance, Uniswap says its weekly buying and selling volumes have remained fairly constant at around $8 billion. TVL has reduced, however on the equal time the fee of tokens has reduced, mentioned Max Krupyshev, CEO of bills provider Coins Paid. People didn't pull cash out so much as the price of their investments went down. Aave and Uniswap also didn't respond to requests for touch-upon mixers. Graphic, mixture troubles big cat's prowl? While DeFi players may face difficult selections on whether to tug back from mixers, a few watchers secret agent a capability upside for the marketplace. Must the U.S. measures inspire traditional institutional traders to join the fray? Larger institutions may see the sanctions as a step closer to legitimacy, potentially giving them extra comfort in attractive with or making an investment in Ethereum and different virtual assets, analysts at Virtual Asset Supervisor Grayscale wrote. In the immediate future, though, little is sure. Illicit addresses diagnosed by Means of Records Corporation Chainalysis accounted for 23% of price range dispatched to mixers in 2022, rising from 12% in 2021. As for Tornado Cash specifically, analytics organization Elliptic reported that as a minimum $1.54 billion in crook proceeds were laundered through the platform. ACA's Talati thinks we have not seen the quit of crackdowns on mixers. Tornado Cash is one of the ones it has been across the longest, she stated. This isn't always the ultimate element we're going to see.